Hello, I'm David Jones, and I thought we'll take a look at gold again, given the fact it's back above $2,000 an ounce. So before we get into it, let's just have a quick look on the charts, just to see where we are. So if we go back to last year, in September, November, gold traded to its worst levels in more than 2 years, and it was down around $1,620 an ounce. But since then, we've seen this great rally, which has seen it once more push through $2,000 an ounce, which is a 25% move off those lows from last autumn. So this has put it close to where it surged to on the Ukraine crisis. But back then, that proved to be an important top. Are we really going to see gold break through to fresh all-time highs this time around? We're going to have to wait and see. But as usual in this video, I'll go through some of the important things to watch about gold, why it has bounced back to where it is now. Then we'll jump onto the platform, onto the charts, and take a look at things in a bit more detail and see where the opportunities might be. Before we get into that, a couple of things from me. I send a newsletter out every weekend. It's free of charge, comes out once a week. To sign up for the newsletter, go to the website, davidjonestrading.co.uk. I also run a trading course that covers short and medium term trading. I've been running it for a couple of years now. I've got 5-star Trustpilot reviews, documented performance, all of that. If you go to the website, you can see more details on that. And for the next week, I've got a discount code of April 20. If you use that, you can get 20% off any of the 3 options for signing up for the course. I'll put the link and the code in the description of this video. So to find out more, sign up to the newsletter, see the courses, just go to the website. Right, let's get into it then. Let's take a look at gold in a bit more detail and try and figure out where it might go next. So as I said at the beginning, last year, end of last year, last 3 months, we saw gold trade back to 2.5-year lows, around just ahead of $1,600 an ounce. But since then, we've seen this impressive rally. We've seen it trade, at the moment it's trading around $2,025 an ounce, which is the highest it's been since March 2022. Of course, we know what happened back then. We saw the Russian invasion of Ukraine. People were looking for a safe destination for their cash. We saw the price of gold surge, only as high as $2,070, which in the end didn't take out the previous all-time high from the summer of 2020. So we saw this run up, but then we saw gold under pressure for much of 2022, but we're back up at these levels again. So why are we up where we are in gold? I think one of the big drivers is a weaker US dollar. We'll take a look at the US dollar briefly as well when we jump on the charts. The Fed the US central bank is saying that perhaps it's being a bit more cautious when it comes to interest rate rises because of what it might do to the economy. The latest inflation numbers showed, I think, US inflation had dropped to its lowest for a couple of years, around 5%. They came out earlier this week. So perhaps we're going to see further weakness in the US dollar. But that's definitely something that has helped gold, this weak US dollar that we've seen since last September. So for me, a lot of what happens with gold over the next few months, we really need to be watching the US dollar as well. And the US dollar is in a really interesting area at the moment. But are we close to seeing the high yet again on gold? We've had a great run, but let's not get too carried away with this fantastic run that we've had over the last, 4 or 5 months or so for gold. Whenever it's traded above $2,000 an ounce, the price of gold has really run into trouble. We've seen the sellers come back out and all of this. We are seeing stock markets gently recovering. I think we're not really seeing runaway stock markets at the moment. So perhaps the need for a safe haven destination isn't there. But what next for gold? Are we going to see it break out to all-time highs? What's a trading idea? Let's take a look. Let's jump on the charts and take a look at things in a bit more detail. Let's take a look at gold. So here we've got the quite a long-term chart going back to the highs from 2020, up around $2,075, something like that. got very close to it on the Russian invasion of Ukraine in March of 2022. And here we are again within, I suppose, $50 or so of those old highs. So it is really interesting up here. But before we get into gold in a bit more detail, it's important that we look at the US dollar as well. Let's have a very quick look at the dollar index. So a factor in what's been driving gold has been weakness in the US dollar. This is the dollar index, the dollar against a basket of different currencies. And we had this great run up from May 2021 up to September 2022. And when we see a stronger dollar, then assets quoted against the dollar, like gold, for example, will normally weaken. So this had kept the lid on the gold price. But of course, since then, since those highs in September, we've seen a protracted run of dollar weakness. We've seen the dollar drop by about 13%, 12, 13% since those old highs in September of last year. And what's interesting, I think, for the dollar now, and this is going to impact on gold, gold is back up near its old all-time highs. The dollar index has traded back down to the lows from the beginning of the year. Are we going to see the market bounce from here? When the dollar was down here last time around, we saw a 5% rally. Will we see this be a line in the sand again for the US dollar? Let's see what happens. But if we did see some dollar strength from this area, that is something that's going to put some pressure on gold. Let's go back to gold. So again, if we looked at the slightly longer term view, going back a few years or so, back to those highs, the summer of 2020, then we've got gold in what's a broad sideways range. You know, whenever it pushes up through about $2,000 an ounce, it doesn't stay up here very long. And this is the question, of course, this time round. Is this time going to be different? And I think, you know, for me, a big level to watch, let's call it $2,080 to $2,100 an ounce. If we start to see gold breaking out through there, then we've got a breakout on our hands, you know, and traditionally from a very simplistic charting point of view, if we see a level that's been a problem in the past get broken, it can be a suggestion that a new trend is starting. So I think that's, for me, is the zone I am watching, $2,080 to $2,100 an ounce. If we get a breakthrough there, then perhaps we're going to see gold move out and start a new trend. So it is really interesting. If we take a look at the last few months or so, then our trend looks something like that. You know, we saw it hit 1960 an ounce in Feb. We had the sell-off down towards 1800, and since then we've seen the market move 10% higher off those late Feb lows. That's a sizable move in about 6 weeks. For me, that market still looks strong. If we flip things over to an hourly chart, then our shorter term trend on gold looks something like that, and that's picking up from the March lows. So this trend line has done a good job of holding any weakness. The latest sell-off came back close to the trend line around 1980, 1985, something like that. And we've seen the market hold. So for me, from a short-term point of view, it is absolutely still a buy the dips market. And I'd only start to think that this 2-month, 1-month trend is starting to run out of steam if the market starts losing and drifts below $1,980 an ounce. So for me, any weakness from where we are at the moment still looks like a short-term buy. So if we saw it sell off to where it was just a few days ago, down around 1990 an ounce, it still looks like a buying opportunity. So I think it's an interesting market in the short term, because that short-term trend is still strong. So absolutely, as far as I'm concerned, there is still scope for gold to push a bit higher than where we've been so far. But from a medium-term point of view, I find it hard to get too excited about massive upside for gold when we know there are these real problem areas coming in, that 2080 to 2100 area. So it's going to be a really interesting market to watch over the next few days, next few weeks. So what are a couple of trading ideas here? Before I talk about that, a quick mention of my trading course that I've been running for a few years now. There are 2 parts to the course. There's a more medium-term approach and there's a shorter-term aggressive trading approach. If you go to the website, davidjonestrading.co.uk, I'll put the link in the description below. You can see all sorts of details there. The course is on offer. The performance when I was openly trading the course approach from November 2022 to the end of January 2023. The breakdown of all the trades I did, you can click and have a look at that in a bit more detail to see how those profits break down. So if you go to the website, I'll put a link in the description. And don't forget, if you'd like to sign up for any of the courses, if you use the discount code, that again, I'll put in the description down below, you can get a 20% discount off these courses if you sign up before the end of the weekend coming. Let's go back and take a look at gold. Let's bring an RSI into the equation. So we've got 10-day RSI down here, and we do have this thing going on at the moment that I think is worthy of taking notice of, and it's this idea of divergence. We've got what's known as bearish divergence happening at the moment, and this is where the market here, if we look in late March, pushes to a high. The RSI goes overbought because the market's had a decent run, and then the market continues to push higher, as we've seen into April, but the RSI is making lower highs. It can be a suggestion that perhaps the market is running out of momentum. So it's this bearish divergence setup. To spot it last time round, if we go here from January, when the market pushed to a high in January and then pushed higher still into the beginning of Feb, you can see the same thing happening. The RSI is falling even though the market is rising. So again, for me, I don't pay attention to RSIs all the time, but this idea of divergence is, I think, one worthy of taking note of. So it'll be interesting to see how it pans out. So if you really thought that gold was going to run out of steam up here, if you were long-term bearish on gold, then one approach is to wait for some weakness and then look to go short. If I was going short up here with a longer term view, I would want my stop above these old highs. So I'm going to have my stop. If I went short today, my stop's going to be probably, $50, $60, $70 away. But if I'm looking for a bigger move, I need to give this market time to move around. So I think it is going to be interesting. Like I say, from my point of view, these are big barriers up here. So although in the short term, I'd be a buyer of dips, more medium term, until we see, and if this level gets broken, 2100, I struggle to see that much more upside in the months to come for gold. Let's see how it all works. So from a short-term point of view, the market is still strong. And for me, if we had a short-term price dip in gold and I was looking for a trade over a few days, I'd still be a buyer of the dips. From a more medium-term point of view, I think it is something of a wait-and-see market up here. We've seen in the past, gold doesn't spend much time above $2,000 an ounce. Let's see if this time round is any different. Don't forget to sign up to the newsletter. Go to the website, davidjonestrading.co.uk. If you'd like to join one of the courses, you can use the discount code April20 for the next 5 days to get a 20% discount. Any questions, drop me an email. But that's it for now on gold. So until the next time, good luck with your trading.